Hi, so we had the budget announcement yesterday and I'm sending my budget report, but that is 18 pages to read. So I thought let's do a quick video summary. So no major winners or losers from the announcements yesterday. Many of the things that were announced had already been leaked or previously were announced. Now there's two words beginning with F that going to mean we're paying a lot more tax in the years to come, and those two words are F for fiscal drag and F for frozen. So let's look at some examples, because what does fiscal drag mean? So fiscal drag is when, as inflation goes on, the value of money goes down because everything costs more and more. So you need to earn more money to be able to buy the same amount of things. So inflation, I think their target is around 2%. We're hearing stories of inflation jumping up to 3 and 4%. But whatever happens, as each year goes on, inflation occurs and things cost more. So you need to earn more money to be able to buy the same amount of things. Now with fiscal drag, there's no big announcements about the 20% tax rate going up or the 40% tax rate going up. But what it means is that because the other F word I mentioned, frozen, the personal allowances are not increasing, that means more and more people are going to start paying the 20% tax and more people are going to start paying the 40% tax. So let's look at some examples. So currently we're in the 2021-22 tax year and the personal allowance is 12,570. So that's the amount you can earn without paying any income tax. That personal allowance usually increases every year with inflation, but it's been announced it's going to be frozen until all the way up until 2025-26. So that's the following 4 tax years. So in 4 years' time, £12,570 is not going to be worth as much as it is today because of the cost of living going up and inflation. Likewise, we have the basic rate band. So this is when you pay tax at 20%. That's 30,700. So if we add these two together, the 12 and the 37, we have 50,270. That's the higher rate threshold at which you'll be paying the 40% tax. Now, a few years ago, the higher rate tax threshold was for those that were wealthy, for those that were rich. But as time goes on, because these rates are frozen in 2026, £50,270 will probably not make you a wealthy, rich person. The same applies to the income limit, so 100,000, that limit has also been frozen. That means when your income is over 100,000, you start to lose your personal allowance. You lose a £1 of personal allowance for every £2 of income. So once you get to 125, you don't have any personal allowance. Likewise, the additional rate, 150,000, has also been frozen. So we can see here how fiscal drag is working, and fiscal drag is dragging more and more people into paying tax and dragging more and more people into paying higher rates of tax. Let's look at national insurance. So it was announced last month that there's going to be what they call a health and social care levy, which is 1.25. So if you're an employee, currently you pay national insurance on your income at 12%, that's going up to 13.25%, and there's the thresholds. For employers, you deduct income tax and employees' national insurance from your employees' wages, but on top of that you pay to HMRC an additional 13.8% of employers' NIC. That is going up to 15.05%, and those are the thresholds. Of course, there still is the the employer's allowance, so you can claim the first 4,000 of the 13.8% employers' national insurance. You don't have to pay the first 4,000. That has also been frozen, and as the limit is the tax national insurance rate is going up to 15.05, we can see that more and more employers, those small employers that perhaps were not paying any employers national insurance, they'll be going over that 4,000 limit and they'll start paying. The benefit in kind, Class 1A, that's going up from 13.8% to 15.05. So if employees have a company car, gym membership, private medical care, that's going up. And let's look at the self-employed national insurance now. So you've got Class 2, that's a fixed amount paid, £3.05 going up to £3.15. And then Class 4, this is for profits. So likewise, that's going up. So for profits over 9,569, you currently pay 9%. That's going to go up to 10.25% over that threshold there. And there's a national insurance upper limit. So when you get to the higher rate of 52.70, the higher amount is going from 2% to 3.25%. So likewise, again, we can see that fiscal drag over the years, more and more people paying more tax. Just a note on class 3, that's a voluntary contribution in case you have any gaps in your national insurance contribution records. Looking at interest, with interest rates so low, not many are getting a lot of interest at the moment, but the first 1,000 and for basic rate and the first 500 for high rate, that's being frozen at the tax-free amount of interest. At dividends, so just as the same as national insurance, there's a 1.25%. Now, it's been said that national insurance, it's been announced, is only for 1 year, but for dividends, as far as I can see, the announcement is ongoing. So it's ongoing that dividends basic rate is increasing from 7.5% to 8.75%, the higher rate going up from 32.5% to 33.75%. The first 2,000 of dividends is tax-free. Again, that's frozen. It's still going to be 2,000 in the next tax year. Marriage transfer allowance, so if you have a husband and wife and either the husband or the wife is below 12,570 or the husband or wife they're a basic rate taxpayer, they're below 50,270, you can apply to transfer 10% of the basic rate of the personal allowance to the other husband or wife. So that works out to about £250 in your pocket, and you can backdate that for the last 4 years. So it only applies if you meet the criteria there. We got the national minimum wage, national living wage increasing from £8.91 to £9.50 for the age over 23. Just a note on Making Tax Digital. So Making Tax Digital has been in place for VAT registered businesses now for a few years, and it works very well. We're using Xero.com. It was meant to be coming into place for sole traders and landlords, so this means that you have to keep all your accounting records in digital format. The threshold is very low, only 10,000. So for example, if you had a buy-to-let landlord and his rental income was £11,000, he would have to be part of the MTD. That means he needs to have some software. That's being deferred to 2024. I do think that keeping records in digital file format is an excellent way of keeping your records, especially for the self-employed. You could easily forget about an expense if you're using lots of different payment methods, but if it's all kept in a digital format, then there's no chance of you losing that record of that expense. So it's highly recommended regardless of the enforcement coming in 2024. So we use Xero.com. Just a point, for small businesses, there is currently an offer with an alternative to Xero called Counting Up. So basically this is a 2-in-1, it's a bank and the software all together, really only for small businesses, but there's currently an offer for the first 6 months free if you go through me. Corporation tax, so we've already had the announcement that this is increasing from 19% to 25% when your profits are over 50,000. So currently, regardless of how much profit you make, you pay 19%. From April 2023, that's increasing to 25% when profits are over 250,000. The between 50,000 and 250,000, there's a gradual increase, and they call that the marginal rate, marginal relief. So I've done an example here. If your profits are 100,000, now you pay 19%. They have an effective rate of 22.75% from April 2023. We have the annual investment allowance that's been announced, that the amount you can spend on plant, machinery, fixed assets, capital expenditure, that's been extended. The allowance has increased from 200,000 to £1 million. And we also have the super deduction, and that's going up to March 2023. So this is only for limited companies, not sole traders. So here's an example. You buy a new van, you're a builder, you buy a new van for £10,000 with a super deduction, you can go 10,000 times 130%, so that would give you £13,000. So if you had a net profit of 100,000, you would deduct your capital allowances with the super deduction of 13,000, so that would give you £87,000 of taxable profits which you pay tax on. So that super deduction is really good, and it's to encourage obviously people to invest in their business to help them grow. And we got capital gains tax. Capital gains tax is currently staying the same at 18% and 28% on residential properties. Rumours are this is increasing to 20% and 40%. So if you are thinking about selling a buy-to-let property or residential property, probably think about now. The CGT annual exemption, so this is the amount of capital gains you can have before you pay CGT, that's frozen at 12,300 for the following tax year. And if you do sell a property, they introduced this year that you have to report the sale and the capital gains and pay the capital gains within 30 days. Fortunately, they listened to reason, and that's now within 60 days. I have done a few of those reports, those CGT reports myself, and 30 days is very tight to get all the information. So fortunately, they've listened and increased it to 60 days. Inheritance tax, not my area of expertise, but the frozen rate, the nil rate band is still frozen at 325. Would you believe the 325 limit came in 2009, and it's going to be frozen all the way up to 2026. And there's a residence nil rate band of 175, that is also frozen. So we can see the fiscal drag really here, because everyone knows about property prices increasing, and with property prices increasing, the estate is worth more, and those that have the inheritance have to pay the 40% inheritance tax once they've gone over these nil rate bands. Okay then, I hope I didn't take too long. I'm trying to get under 12 minutes. And that's my review of the budget and also the tax to pay next year and the years to come. Any questions, do let me know. Bye.